everyone to the Ultimate Trading Webinar for Beginners. My name is Danny and I will give you the webinar today. And we're going to open the webinar, like I said, with the introduction to the company and the web trader. So as many of you know, we are a regulated company. Just a second, we'll get for the notes. Okay, so AvaTrade is a regulated company. We're here for almost 2 decades, since 2006. We have 9 licenses worldwide. For any question you got along the way, you can easily contact the customer service right here to chat with us or to communicate via the WhatsApp, whatever you prefer. If you're using a different interface, you might as well want to contact us directly to cs@avatrade.com for any kind of questions regarding customer service. As an addition, if you got any questions regarding trading, you can have a senior account manager assigned on your profile to give you full support through the process. And of course, any kind of questions are under the trading umbrella can be addressed to your senior account manager. Risk money management, analysis, really any kind of calculations, any kind of doubts you've got regarding your strategy, your senior account manager is there for you to share your any questions you've got, and it doesn't cost you anything as an addition. So like I said, we're going to have today the webinar using the desktop, obviously the desktop version. We're looking at the desktop version of the web trader, but if I'm using a phone, I can find it in my store under tradings, AvaTrade's trading app. This is how it's called for the phone users. Now we're gonna write down the regular platforms we have as well, the traditional MetaTrader 4, MetaTrader 5, Ava Futures, Ava Options, and as well Ava Social, which I would like to mention a little bit. And the reason is, with Ava Social, we can do copy trading. Copy trading means that I can link my account. Okay, let's suppose that I'm trader A and I would like to copy trader B. All right, this gives me the ability to link my account to trader B's account, and I will simply copy the strategy that he's using. Now, there could be a lot of reasons for me to do that, because copy trading means that it's automatic. The trading will be done automatic, and I don't have to open or close a single trade. Of course, I would want to monetize and do my research before selecting which trader I would like to copy. But at the end of the day, if it works well and I'm copying a strategy that works well, I can basically make money without opening a single trade by myself. Again, I would recommend to still have some background, to still know how to trade, and not just to do it blindly. As an addition, this app, the unique thing about this app is it also allows you to customize your lot size. So for instance, let's suppose I don't have 10,000. Okay, let's suppose I'm just a beginner. I've got 100 or 1,000 or whatever amount you want, but not 10,000. And this trader here is using with 20,000 as an example. Yeah, and I've got, let's say 100 or even 1,000. Let's say 1,000, right? $1,000. Okay, now I could run into an issue if I'll copy a trader with 20 times bigger balance than mine, right? In terms of the budget, in terms of the margin. Now, how can we solve this? So Ava Social, what it allows you to do is it allows you to still copy the strategy, but with a lower lot size, maybe even the minimum, just as an example. This gives me time to experiment and see if this is really for me or not. Maybe if it works well, I will add, the remaining funds to enjoy the exact same result. Maybe not. It's up to you. Anyway, I would like to carry on. So guys, if there are any questions until this point about anything that I said, feel free to share. For Ava Social or anything else. Now, we're going to carry on with the menus to the left. So we've got here several menus. Let's just delete that just real quick, okay? And what we're going to do is we're going to look at the menu at the top. We've got here nice 3 lines. And in here, I'll have my personal area. In here is trade. This is where we are. Underneath is positions. Underneath is orders. If I would have any orders at the moment, I've got history, which I can select, you know, at what range I want to be displayed in here. Underneath, we've got signals. Signals is let's speak a little bit about the signals, how it's built. So we've got here the different categories for the signals. Okay, in here, so when all is selected, obviously all is going to be shown in here. If only commodities is selected, it's only going to show me commodities, and I can even search an instrument if it has a signal or not, but I'm going to show you how to do it from the outside, not from here. So if, for instance, and let's also understand a little bit how this is built. So we've got the name of the instrument, we've got the type, if it's a buy or sell, we've got a stop loss, entry price, take profit, view signal, and the time that it was produced. Obviously, I would want to take a signal when it was just analyzed and not a signal from a few hours ago, because what can happen is, because there is a certain level of analysis. You see, when I click on view signal, I've got this bunch of analysis in here. I can click on the arrows to expand the chart, and I can also match the validity of the time frame I'm looking at to the time frame of how the signal is built. So if I'm looking at here in the validity, it says daily. I might as well even go for hourly, so I can go days. If it doesn't look the same, maybe I can go hours. Okay, if it doesn't look the same, maybe I can go to 1 hour. Just experimenting a little bit until I'll get the picture that I want. Okay, and that looks a little better. I'm clicking here, by the way, on the column price, and I can click and drag up or down to squeeze or extend the chart. Now, once I'm satisfied, I can look at the chart and say, okay, let's go with the buy scenario. So we've got here a buy and a sell scenario. We've got here the key levels. We've got the pivot points, support and resistance. We still don't know what they are, but I will explain about it in a second. We've got a TP for take profit and SL for stop loss. But let's keep it simple. Let's suppose we want to just buy. So we're going to click here on buy. Right away, we've got a take profit and the, oh, sorry, something just happened. Right away, we've got a take profit and the stop loss ready for us. I can make any adjustments that I want. I can increase the lot size. I can increase the length of my take profit as an example. I can do whatever I want. But if I don't want to do any of those, let's take another one. Just keep it simple for now. Okay, so we're going to take another one. Just clicking here to fold it down, and then I'm going to select the second one on the list. Let's go Brent oil. Okay, and let's speak a little bit about what the TP and the SL is, take profit and stop loss. So when we're looking at trading, we primarily looking at two types of orders. So we've got market execution, and which is buy or sell by market. I guess other guys from MP4 and MP5 will be familiar with this. So this means buying or selling at the market price. We've also got pending orders. Pending orders, we've got 3 of them. Execute when price hits. We've got take profit. We've got stop loss. What they do is very, very simple. The intention using pending orders is to automate the position. Execute when price hits is opening the position automatically when reaching the price. The take profit is closing the position automatically with a profit. And oh, there are some serious typos here. Position. Okay. When reaching the price is closing the position, and again position. Okay. Excuse me for my typos. Just typing quickly so I can make everything at the time. Is closing with a profit. Okay, with a profit, and this with a loss when reaching a price. When reaching the price. In other words, we can design any price we want. Well, not any price. There are certain limitations. I'm going to show you loss when reaching the price. So at the end of the day, what we've got here, thanks to the signal, is to fully automate the position in terms of the closing for the take profit and the stop loss. And this is written right here, take profit, stop loss. I'm going to click here on view signal. I'm going to click here on the arrows. I'm going to also match, well, the validity doesn't seem too bad. Kind of makes sense. Let's stay with hours for now. And now I can just choose a scenario. Let's go sell. That's it. We've got the take profit and the stop loss already marked for us. So to help emphasize this scenario, we're going to click here on the price. Let's make it green. In a sell scenario, our intention is that the value will decrease. Therefore, versus on a contrary from a buy. Oh, sorry, we should have taken the red one. There we go. Now, in a buy scenario, I want the value to increase. In a sell scenario, I want the value to decrease. This is why, to close the position with the take profit in a sell scenario, I would want the value to decrease. Therefore, my take profit will be in a lower point. Okay, and the stop loss will be in a higher point. So in fact, when it goes higher, I lose. When it goes down, I make profits. It's a sell scenario. Buy would be the other way around. Yeah. Now the green line is here to help us understand where the position can be closed with the profit, 63.1, and the stop loss, which was designed by the signal. Right. I haven't done anything to get this. Again, I can make any modifications if I would want to, but if I wouldn't, I just click here sell and I'm good to go. This took me 5-10 seconds maybe. Let's take another one for fun. And there sometimes you're gonna see this blank area, a blank value for the stop loss and the take profit. And the reason for that is because, as I have explained, the market is moving up and down constantly. So sometimes if I'll take a signal that has been too long since it was produced, I'm not gonna be able to use it. If I'll take Spain 35 as an example and I'll click view signal, we're going to see the message here, the market has already reached a key level. This makes the signal futile. If I'll click here buy, we're not going to get anything. Okay, we're not going to get the take profit and the stop loss, which what they do is written right here. But you don't have to remember, because if you point on the platform, it's going to show you the explanation. Okay, now, if there are any questions, as I said, about the previous stage or this stage, feel free to let me know. One more thing that I'm going to show you regarding the signals is, first of all, they are manufactured by the third-party vendor, the Trading Central, and not AvaTrade. And the second thing is, what if I would want to search for a particular instrument that I'm trading, and I don't want to go through those lists and find it, you know, and find it over there. I want to find it from here quickly. So how can I do this? Let's suppose I'll type here NASDAQ, click here, and then it's going to show me if signal has a signal, if NASDAQ has a signal or not. So by clicking here, it's going to do the same thing, opening the analysis, then I can expand, then I can click here buy, and it's going to do the exact same thing, taking me to the signal with everything set for me, and I don't have to do anything if I don't want to. And that's just very straightforward for you to use. As an addition, I would also like to explain how analysis basics works. Now I've clicked on the news section, which is next in line, right underneath the signals. Okay, and when I'm looking at two analysis types, we've got technical analysis and we've got fundamental analysis. Among the technical analysis, we will use primarily the numbers from the chart. So these mean averages, it means statistics, this means indicators, and of course support and resistance, and so on and so on. Now okay, so this will be the how things are moving. We're analyzing everything from the chart. This is why it's technical. We're using technical data from the chart to accumulate that. And the fundamental analysis from the other way around will be news, will be articles. We've got earning seasons. And what else? Interest decisions. Worse, God forbid. Never mind. So this is obviously, that's the why. So we got the how things are moving, but we also want to know the why things are driven up or down. Such as an example, gold just broke another record, not now, 2 weeks ago, but which is again could be a result directly from the economy change, and we can see the progression on other metals as well, which I'm going to show you. But anyway, never mind. So we saw in the signals, the technical analysis, we saw those things, support and resistance and pivot. We'll speak about it when we will carry on to the second part. But now, what if we want to know the reason? What if we want to know why things are moving up and down, to maybe choose an entry or anything like that? So one nice way to do that is via the news section. In the news section, straightforward, we get the news. So we're looking at the pre-European market brief. The Australian inflation bounces Fed and Bank of Canada in focus. So this, how can I know which instruments is related to that? One is I can read the article. It says here NVIDIA and other things that I can identify. Another way is just at the bottom here, we've got 4 related instruments. We can click it and then we get what's related to crude oil, gold, Bitcoin, and pound, as in addition to what's mentioned in here. Another nice way for me to gather some fundamental analysis, some news, is underneath. We've got here under discovery, under the market buzz. We get more specific. We'll give it a little bit of time to load the data. Okay, so we've got here this bubbly layout. We can make it a table as well if we would want. We see that semiconductors are right in the middle. Okay, the Beyond Meat, and we sorry, this shows. Okay, but in here it shows NVIDIA. Okay, so we can click here on NVIDIA just to get the news. There are other categories as well. Maybe I should have showed you. Never mind. So we're going to stay with NVIDIA for now. And we see that there are different parameters in here. And we see that there are various topics of news. So what if I don't want to go through all of this? And okay, so I can click only the partnership, and only partnership will be filtered out. And I can focus on what I wanted. Now, this is not the end, right? We can take it to Google, and we can search, and we can dig deeper, and we can really enhance our analysis to any extent we want. But this could definitely give us an idea where to begin, what to search. And okay, now and I could go back, of course, select another one. It's very straightforward, very accessible. Underneath, under the economic calendar, we can also get more specific, more official news. And the way that it works is very, very simple. We see that some things are filtered. That's fine. We're going to fix it in a moment. But at the moment, what I want to do is just to quickly go through the way that it's built. So we've got here 5 icons: this impact, volatility, price chart, event chart, and at the calendar. We'll look at that in a moment. Then we've got the previous result, the expected result, the forecast. We've got the actual result, and we've got the impact, the importance. The impact, importance, call it whatever you want. And we see this red line here. Now, what's the difference between what's written on top to what we've got here at the bottom? Well, since we've got here on the top, we've got the actual, we've got the result, and in here we see that there is no result, we right away understand this is what happened, this is yet to come, right? Didn't happen, needs to happen. So we can separate it with this red line. Now we see the things here are selected, and we only see US, we only see, you know, those things, but we want to get back to default and do it properly. So we'll select first of all today, then we click on the arrow here, and we will expand the range for 2 weeks. And as an addition, I'm going to click here on reset, and then nothing is selected. So I can click here on the arrow, and then I can let's go Aussie, and let's go Nikkei was also extremely interesting. Let's go Nikkei, Japan yen. Okay, and we've got only this filtered. So we've got Australia, we've got Japan, we've got this red line who separates the previous results with results that with the, you know, the future events. And what we spoke about, we've got the previous forecast and the actual. Now, what if I only want to focus on the main events and I'm not really bothered by the medium and the low? Well, for this is very easy. We can scroll up, click on high, and only high will be filtered. What else I could one more thing before we carry on. I think it's quite self-explanatory, everything that is happening here, but one very cool feature that I'm going to show you, you see this empty calendar here. Now, to do fundamental analysis, I need to align the lifestyle that I have during the week to those events. So I can go to the chart and set up my, you know, my indicators and everything to be ready for the news. So I'm not always during the week able to just remember when it happens and do this. In this case, I can book it into my calendar, and then I will have a reminder in my own calendar on my phone. And I can go to the computer and do what I wanted to do. I don't have to remember. This is, at least for me, this is very, very good. And I would recommend you guys to test that out, depending on which calendar you're using, depending on your email. Anyway, this could be helpful, so use it. We're going to now officially begin the second part. I think we concluded most, if not everything, that we should have had in the first part. If until this point there are any questions, feel free to let me know. You're welcome to also ask anything else regardless what I've explained, but also if something needs to be explained again. Now we're going to officially begin the second part. We'll click here on the AVA trade to go back to the default. And this is how we get back to trade. Now let's find ourselves a nice instrument to work with. We're going to click here on the commodities, and let's just a second give a quick look at crude oil. Okay, recovering, and we've got, I'm going to find platinum in the agriculture. There we go. Okay, and hold on. There we go. I think we've already analyzed that, so I'd rather show you something. Let's go oil. I think oil doesn't look too bad, right? Just recovering. Let's go days. Okay. At least today. At least today. Now, first of all, before we even begin doing any analysis, let's clean. Maybe I'll leave it for you. I'll leave it for you right here. Just those two little things, but what we've got in the top, we don't really need it. So let's go crude oil. And okay. As we can see, this is actually a search bar, by the way. If I want to switch to NASDAQ, I can just type NASDAQ, click it from the list. But pay attention that crude oil is still here on the order entry. So if I choose another asset from here, I must click buy or sell again to launch the correct order entry. So if I'll bring crude oil again, I'm going to select crude oil from here. It's still on NASDAQ. I got to click sell or buy again. Now, if I go to the right, we've got here various time frames. If I go another one to the right, we've got here those candles, or it could be line if I want to, it could be bars, okay? If I keep going to the right, we've got the crosshair. Of course, I would want to enable the crosshair, so then when I hover across the candles, I get the numbers. Without the crosshair, I do not. So we'll click here, and then we do. In here, we can split to different layouts. In here, we've got different indicators. It's the easiest way I'm familiar with to add an indicator. We can just click, drag, and click save, and this is where we are. To get rid of it, very easy. Click on X, click on save. Very good. In here, we've got some nice lines that we can place for support and resistance. I haven't explained about it because in the beginning, it didn't seem to me too relevant to speak about support and resistance. But now I think it might be a good time to do just that. Okay, you saw that I've placed those lines on the chart on certain points where I think that potentially crude oil has turned around, or at least it reached to, due to a fundamental change. What is a fundamental change? A fundamental change is exactly what we wrote in here, right? Could be any part of news, articles, earnings season. This is less relevant for oil, interest decisions, and worse. Also, transportation is part of that as well. And of course, on Wednesday, we get the inventories, which could give us even a better idea why crude oil looks the way that it looks. Okay, now let's see if there will be just a quick confirmation here, guys. Just really in moments. Okay, now the way to begin, the way that I like to begin is first to set the load size to 0.01, because I can always increase to what I want. We can even leave any kind of nodes, so let's call it resistance. Resistance will be the roof, okay, the peak points, pivot points in the top of the chart, and the support will be the bottom. As you can see, I've marked several levels. From that, we can learn that support and resistance are not individual. There is not only one support or one resistance. There will be levels. And if I would switch to different time frames, I would have different levels of support and resistance. Now, how is this useful for us? As I have explained, when I choose an entry, as an example, oh, we still don't know what an entry is. This is a webinar for beginners. Let's break it down a little bit. Let's break it down. I'm just going to push that down. Okay, and then I'm going to write down several things that will help me construct a position with a bit more sense. Okay, the reason that I'm writing those things will be explained as we carry on. So we've got movements times units equals sum, and we've got sum divided by movements to give us the units. That's all. Very, very simple. Now, so at the moment when I'm looking at crude oil, it does seem like today it's reversing, but in the past 2 days it did go bearish, right? Just a side note, bearish, we say bearish because a bear will slam his opponent to the ground and bull will lift you in the air. So bull means up, bear means down. I'm sorry for the people who doesn't understand that semantics, but we're just used to speak that way. Okay, so we can see that crude oil was negative in the past 2 days, but now it's recovering, and we've got this nice tail of to show us the recovery point, so we can switch to 4 hours and then quickly identify that. It's really not necessary for you guys to do what I'm doing now. I'm just explaining. Now, if we go back to days, like I said, clicking on the column price allows me to squeeze the chart up and down. Now, the way that I like to begin with is first is to choose a scenario. It doesn't matter if I'll go sell or buy in here because I can always change it. I can always change it by clicking here, buy or sell. So let's begin with the buy. Well, if we'll want to change, maybe we'll change it. So we're going to go with buy 0.01. When I'm choosing when I think about buy scenario, okay, it doesn't matter for what point, if I'll buy now or I'll buy later. If I buy, my intention is that the value will increase. Therefore, let's hypothetically pretend we want to buy here. So we'll click here on execute when price hits, take profit and stop loss, just enabling all of them. I didn't place any values in here, just enable them. That's all. And I'm also going to mark 60.5 to be my entry. What is this doing? We've explained in the beginning. Execute when price hits is opening the position automatically when reaching the price. So when I design 60.5 to be my entry, it means that if it reaches that level, the platform will launch the position automatically. Now, regarding the take profit and the stop loss, so hypothetically, if we buy now, it means that any point from where we are higher will be our profit area. And our point down, our area down, will be our loss area, which is in a contrary from the sell scenario we saw in the signals. Higher means profit, lower means loss. Also, when I'm planning to use 60.5 as my reference of entry, I need to know approximately where do I intend on closing the position. Will it be here? Will it be here? Will it be higher than the resistance? I need to know when I intend to close it, right? Why is this important? Why can't I just click here buy and open the position? Why do I need to think where to close it? Anyone has any idea? Just a second. Okay, we'll keep it green. Yeah. So my question to you guys, before I'll explain about the TTMU, the target time movements in units, why do I need to think about the price to close my position in advance? Anyone has any idea? What would be, for me, the reason to do that? Because as we can see in here, if I'll click on buy and it goes higher, I'll make profits. So why do I care when I intend to close it? At what price? What does it give us? Where to place? Correct. Very good, Sam. Where to place the take profit. So this is a nice note, right? Where to place the take profit. And as in addition, if I do design where to close it, I also design the position to match with the possible profit that I want to make. So by setting a target, I'm getting all of this. Let's suppose that my target in this case is going to be only, let's say, $1,000, okay? And the time, why also I need to think about the time? Who cares? Maybe I'll make $1,000 today, maybe I'll make it in a week, maybe I'll make it in a month, in a year. Why does it make a difference? Because $1,000 in a day might be great. I'm trading every day. I'll approximately make 20 to 30K a month. Not bad, right? What if I do this in a week, holding this position for a week? So still 4K a month, not a bad bargain. What about in a month? Yeah, this is now very not as good as it was, right? What about a year? To swing with this position for a whole year to make $1,000, maybe the swap is going to be, the swap by itself is going to kill me. So we understand that the same exact amount, just changing the time to make that amount, do change the meaning of it. So I'm going to change the $1,000, I think, with a $10,000 account to make it in a day. It's quite ambitious. So let's go a week, okay? One per $1,000 a week, not bad. Now, next to the next thing we want is the price difference, the movement. So at the moment, it seems like if I analyze the previous candles, let's just point on the previous candle. So yesterday we see that oil has moved from an opening, and what I do is I just point on the candle. Just point on the candle. I'm not doing anything special in here. So we've got the open, close, high, and low. If I'll focus on If I'll focus on just subtracting the open from the close and the high from the lows, I know how much oil moved yesterday. So the open is 61.28, close is 60.23, high is, let's see, 6139, and oh, sorry, this should be low. There we go. So let's see, 5976, right? So in this case, all we gotta do is just to quickly subtract the open from the close. Now, this is a very primitive way to do this. Something here doesn't make sense. Let's try the other way around. Okay, but let's flatten that. Let's flatten that to be $1. Got no problem with that. And 61.39 minus 59.76. That's $1.50. Okay. Right. So in this case, we're looking at $1 to $1.50 per day for oil. Not bad, not bad. But unfortunately, if I look at the size of this candle versus the size of the candle and the shape of the candle versus other candles, we right away see that this is very dynamic. And to only analyze yesterday, it doesn't give us anything, because in here, the average changes right away. So to get an average like this, I would need to accumulate a bunch of candles to withdraw my average from. In other words, this is very time consuming. So we're going to click here on indicators. We're going to type here and type to filter AVE for average true range. Click and drag it to the right. In here in the length, we're going to select 10 because it seems fine. 10 days backward. Let's count together. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Those blank spots are actually the weekend, and until this point, it seems like it's relatively the same size of candle. In here, it gets bigger and it changes. Okay, so with this in mind, we see that 1.2 is the actual average for oil, right? The actual average true range. So I'm going to put here ATR equals 1.22, and then I've got here per day for oil. Now, if the average is 1.22, I can maybe target my take profit to be $1 away, right? Just a quick adjustment. We're looking at days, and I want the average for weeks. So let's go click here, change it to weeks. Okay, nice. Now it's 4.2, and yesterday, if I'll subtract the numbers from last week, open is 56, close is 61. That's around $6, and sorry, $5. And then we've got 52 and 60, 56. That's another $5. Yeah, kind of makes sense. 4.2. I'm happy with it. So I'm just going to quickly correct it to the weekly average and not the daily average. And now it seems fine. And now I can target, since it's a week and not a day, I can target my profit to be $4 away. Not bad, not bad. Let's say $4 is even lower than the resistance, so I'm quite happy with that. Let's try 60. We are at 60.5. That's entry. We're going to add $4 to that. It's going to be 64.5. Let's go 64.5. While marketing green is our take profit, we'll take that down a little bit. And this seems fine. We're also going to use the same ratio for the stop loss. So that's going to be 60.5 minus 4. So that's 56.5. Our rectangle just disappeared. I'm going to bring it back. Or not. Let's see. It doesn't cooperate with us. Okay, but you guys see what's going on here. And again, you guys don't have to do what I do. Like I said, I'm just doing this to show you. So we're looking at 56.5. Okay. So let's write it down right here. Let's type entry is 60.5. Then we got take profit. We said take profit is 64.5. Stop loss is 56.5. And this looks pretty good. So in here, looking at, we're gonna write down the take profit stop loss, 64.5. Yeah. Now, since we are with 10 barrels, and we are looking at $10 away. Let's look at the equation we wrote here. Accidentally deleted it, but I'd rather to have it in the frame. So we're gonna go units times movements equals sum, and we got sum divided by movements equals units. Yeah. Now, if we look at this equation and we're looking at what the platform did, we see that we are $4 away from entry to take profit and $4 away from entry to stop loss. And this gives us $4. $4 away times 10. So this gives us the 40. How much do we need to get to 1,000? Let's use the second equation. The second equation is sum divided by movement. So we're going to take the sum. The sum is 1,000. The movement, we said 4, right? So we're going to go 1,000 divided by 4. And now if we'll divide 1,000 by 4, what do we get? Who can give me the answer? Anyone knows? Is a question from Jacqueline, but how did you get to those values? Okay, so Jacqueline, the way that I got to those values is very simple. Using the ATR, I use the ATR as a reference, and then because I'm in a buy scenario, I added the price difference to my entry. This is how I could know that it's $4 away. In the stop loss, I did the same. I just looked the other way around. Okay, this is how I got to those values. Now, how much is 1,000 divided by 4? Let's do it together. 250, right? Okay, now 250. So this is, what did we say? This is the units, right? The units. So I'll type here 250, and what do we get? A flat 1,000. Amazing. So we got here 250, and this looks fine. And here I'm gonna write 1,000, and here I'm gonna write 1,000 as well, and this looks pretty good. Now, the only thing that I'm, like I said in the beginning, and I said along the way, if something is not understood, like Jacqueline asked, and I think Sam asked, you're welcome to share with me if there are anything that is not understood. As an addition, I may want to change the ratio of 1 to 1, because I'm happy to make 1,000. That's 10% of my balance, but I'm not so happy to lose 10%. So this is 10% exposure. Okay. How can I know that this is 10%? I can take possible loss divided by balance. This gives me factor. Times 100 equals percentage out of balance. So if we'll try, and we will do 1,000 divided by 10,000, this gives us 0.01. Sorry, this gives us 0.1 to be exact, and then times 100 gives us 10%. So we'll try this together. Okay, very simple. Now, how do I get this to be 2.5? Let's suppose I want to look at the ratio of making 1,000 and losing only possibly 250. How do we do this? 2.5, right? So, because what we've learned in here, the units times movement is what's giving us the sum. I can do one of two things. One, I can have a lower lot size, can decrease the lot size, but this means that my profit will be affected as well. So another thing that I can do is I can move the stop loss. If I'll move the stop loss closer onto the entry, what do we get? We get less. So if I'll divide this 4 by, well, 4, what do we get? Only 1. So 60.5 minus 1 is 59.5. And this gives us the 250. We can also see that since we've got 250 units versus $1, gives us the 250. This is very straightforward and very simple, and I hope that this will help all of you to make progress. The last thing we're going to do today is to validate that we do have the budget to acquire this position. Since we see that the value is 15,000, but we're only with 10. How can we, what can we check in here? We see that the price per unit barrel, since we're with oil, but okay, is 60.4, right? Times 250 barrels times amount of units, 250, right? Equals value. What is the value? Okay, we see the value right here. The value, we see the value right here. The platform does this for you. Now, if we look at the value and we think, okay, this is too much for us to open, but we got here leverage. So thanks to the leverage, we can. How does the leverage work? The leverage will multiply my buying and selling, allowing me to acquire more units than I could have had without it. It doesn't mean that I can that I will lose more or less because of the leverage, because if I can trade without the leverage, I would get the same results. But the leverage just giving us the ability to acquire more units, and as a result, we can gain or lose accordingly. Okay, so what the leverage does is just multiplies buying and selling. Okay, this is what it does. It gives me the ability. Now, what can be done as a result? Because I multiply by 10, I can divide my value by 10 to know my required amount. Okay, so we can go value divided by leverage to know the margin impact. Okay, margin requirement to open the position, of course. So this will be 1,1510. Okay. Now we still have another 5 minutes before we say goodbye. So I'm happy to answer any questions that you have, guys, regarding anything that I've explained so far. And in the meantime, until you guys will ask your question, I will explain a little bit about the logic of what was done here today until we got to this point. The first thing we did was we looked at days, right? It was like this. There was nothing on the chart. It was like this. We got, we got this general picture here. We've marked resistance. We've marked support. As we said, those are peak points on the chart. They are lower levels than that. I mean, they're closer level to the entry than what I've marked, but I primarily focused on both. So we see support is at the bottom, resistance is at the top. As a result, I decided to go with a buy to think that this might be a key for recovery. So if I'll quickly take a trend line and we get this right here, maybe it will be easier to show with the trend channel, maybe like this, it's more visible. Never mind, but you see those bunch of candles, okay? You see those bunch of candles, and then it made me believe that crude oil can still recover up. This is why I took the buy in here, and I didn't plan anything as, with the execute when price hits, but relatively close to the current. And as an addition, we also wrote down those guidelines of target time movements and units. This helps us capture where potentially we want to close the position, since we've got a number to get to. The second thing after we did when we've got the target is to think about a realistic time frame to hold the position. Since to make this thing in a day, to get the same movement we're expecting in a day, it's not, we see the average per day is only 1. So it might take it several days, maybe up to a week. So week made sense to us, and we stayed with weeks. So we switched to weeks. And with weeks in mind, we do get a bit more fuller picture like this. As an addition, we also wanted to measure where to close the position. So we use the ATR as reference. Initially, we could, use those candles. We could subtract the numbers and accumulate an average, but it's time consuming and we're limited in the session. So I used an indicator instead. The indicator I used is average true range with length set to 10 for 10 weeks. When I click save, I do get the number. I use the reference of 4.2 to be able to determine where my take profit is going to be. And stop loss, I also use the same ratio of 1:1 before making the adjustment. So my entry would be the current, very close to the current. Take profit 64, and stop loss initially was 56.5. Then we had 10 and 10 exposure. And after we filled all the numbers, we also came to the conclusion that we need 250 barrels. Initially, it was like this. Sorry, it was like this. And then we saw that we can make or lose only only 40, so we made the necessary adjustment, and now it seems fine. And the last thing we did is we validated that we have the price. We've got the budget for that, and this is called a margin impact. This is not what we need, guys. This is not what we need available. This is what we need available to open the position. Now, why? What's the what's the idea with the margin here? Okay, why do I need to worry to have enough margin to open the position? That's not the only thing. I also want to maintain a healthy level of margin at all times on my account, so I'll be able to also hold the position. It's important to know that the margin level cannot exceed down from the limitation. If we cannot fulfill the margin requirement in our account, the platform will close the position. Okay, so I want to maintain a healthy level of margin at all times. Now, unfortunately, guys, our time is almost up. I really hope that this procedural approach can help you make progress. Like I said, of course, the idea in here is not just to do it with oil, but we can delete those numbers and we can play this same procedural technique to align and compose our position to be according to our strategy. Besides that, I want to thank you all for joining us today. You're all welcome to join us with tomorrow's live Q&A. Until then, I wish you all best of luck with trading and have a good day.